Good morning, Mike.
Good morning, Dale.
All right, the TradeGATEHub.com, Dale and Mike show so that you're in the know. And we are sponsored by TradeView. So Mike, gold. All right, I don't want anyone to get FOMO up here, and then I talk to you and you're taking the other side of the trade lightly. I think it's a good shot because I think we're completing a wave 5 up here. It could, it could keep going a day or two, but it's my belief and my conviction within the next several weeks, or at the most by June, that you'll be able to buy this gold back under 1900. Okay, I'm thinking 1880 to 60 is a possibility.
No, I appreciate that. The bottom line with this right now is the last move is usually the hardest move. This move up in gold, the last move is going to be a capitulatory move. I don't think we're there yet either. I don't really want to.
It could be. I mean, look at the daily.
There are better trades. Listen, I'm in it. I get it, but there are better trades. Let's be honest.
All right. So really, if really, it's going to negate the breakout under 1930. But you see this RSI reading that we have right here, Mike, compared to what we had a few weeks ago. We're making new highs without momentum confirming just one thing. And, it's a lot of it's due to the dollar breaking down. Looks like the dollar wants to make new lows here. Maybe get a little panic under the par level. And you would think that would be helping what? Risk. And to me, today's action is somewhat negative. We talked about 4200 a couple of weeks ago. And, it was Tuesday, so I took a shot in the S&Ps on the short side. I actually think that this could turn into a major decline because
why?
You know what?
Why is this one different?
Okay, because of this.
Okay.
Let me build my case. So I would say because of be patient.
Maybe only 3 stocks are whole represent of 80%.
Here's the strength. Here's the strength.
Yeah.
Okay, semis, right? They've led the way. They've outperformed the whole way. Here we are, just like gold, putting in new highs, diverging on the RSI. And then I've been talking about CAT, the dead cat bounce on CAT.
And deer.
And deer. So, I just want to bring up CAT. When I say don't buy a dead cat bounce, this is why. See this candle?
I didn't even see that.
Okay. So we're down 930 on CAT. This was just a little rally back to resistance. We're failing. That's happening in deer as well. Deer is getting rejected. And when you think of companies like CAT and deer, CAT kept making new highs while the market had peaked in early, late 2021.
No, the C shoulder right in March was the one right there.
Yeah. So, we talked about CAT and especially the dead cat bounce that you're having in CAT. I mean, I hear you're scoring on some Wells Fargo puts. We were talking about, I mean, you look at Goldman. Here's the, is this the industrials? No, that's Potash. So I just see a lot of the real economy looking heavy. So here's deer. Where are we? Right here. Down 10. Rallied right back to resistance, similar. And then, okay, so here's the other story. And I'll start with the metal itself.
The doctor?
Yeah, doctor breaking down out of a descending triangle.
No, I don't care what that chart. That's fair.
Okay, so copper doesn't look too good to me. I mean, I think we'll see 390 and then 370. So these are all kind of a take on the economy, and I will rest my case with TLT, which when you look at the daily, I'm going to be on Real Vision talking about these things today, so it's kind of like a rehearsal for me. that the daily on TLT is an ascending triangle, meaning which is the opposite of a descending triangle.
That's
They're both
correct. I'm looking right.
reversal formations.
You're right.
So you have this straight line here, a breakout over 109, gives you at least 117.
No.
If you want to be aggressive, you're talking in the 120s. And I don't think we're going to have this bond rally because things are great. Okay. I think the bond rally is because of what I showed you in the belly of the market, copper stocks, Caterpillar, tractors, construction,
No, fair.
deer,
Fair.
farming. So that's why I think it could be different than the last break.
Well, I'm going to tell you, Coach. I hope you can use this one. This is definitely not a rehearsal. It was pretty. I mean, that was on point.
Okay.
I'm for right now. I'm just gauging how stocks with relative news within the relative themselves are acting and taking upon it, whether it's taking profit taking or the universe is narrowed a little bit, and it's just a way to get out a little bit. Listen,
look at Apple. Look at Apple. I mean, this trend line, and it could break out. I'm not saying that it can't break out, but look at where it's at. Check that upper trend line.
No, I still have right now. My price was 159. My only price is 161. I'm not short of a lot of it. I was short 800 shares. Now I'm short 1,200 shares. What am I? Yeah, 1,200.
Back under 56, it's got problems.
It's more of a gauge for me. I might as well be in the VIX if I'm in Apple at this point. I mean,
VIX putting in a higher low.
I know.
I bought more VIX yesterday. I've gone out to July to trade the VIX, and I think maybe I'm talking my book, but the VIX got to 31 last time, and I could make a case for on this wave. That's the weekly's just a mess. Let's go with the daily.
I've heard that.
If we're bottoming here, I think that we could go above this 31 this time and trade in the 40s. So I'm pretty bearish equities here.
Put up the Wells Fargo chart, Coach. WFC symbol.
And the reason is, even if yields drop, like that's what the bonds are implying, and most traders would construe that as bullish, lower yields. How can it not be bullish?
It's price action, Trump sentiment.
All right. Yeah. So I think it's not going to be. It's not going to be bullish. Low. It means that the narrative is shifting, and we've been talking about this for a while.
Yes.
From the inflation issue, which won't go away. It'll come back later.
But
right now, it's about growth. Okay, we're going to have a growth scare here, Mike. That's what I think.
On fire right now, man. I agree.
So that's where I'm at. Here's Wells.
I mean,
Mike,
listen,
okay, so you bought some puts and they're performing.
I mean, for Wells Fargo was the one that got so damaged for like the past decade that was almost like the one that was the one that the people parked some money in because it was already beat. It's been already beat up so much, but now it might be catching up to them as the puts I see are very, very, very aggressive here. And
Coin still looking bad too, bro.
It is.
Are you still with it?
No, I'm not.
Okay.
No, I'm not.
And here's the regional banks. They're going to go and make new lows. It might be a third drive to a bottom, but they're going to make new lows here.
I'll tell you the new lows. Punch up Schwab. SCHW is the symbol. The last one we'll go to. Now, this basically is emblematic of, I think, what's going on in the sector. Okay. Charles Schwab, as opposed to the other ones out west of, for example, First Republic or Pacific West Bank, all those other banks. There it is. That's the second one. Okay. The chart on Charles Schwab tells me that for maybe these other stocks have bounced a little but put in a floor, but for something like this, which was arguably maybe a medium tier to a degree, no disrespect, for that, including all the insider buying, the fact that it might be cheap for somebody to scoop them up, for that right there, not even a break, that's the one that I think that's the one that I'm watching in the banking sector, if you will.
Look how bad Goldman looks too. This was a dead cat bounce in Goldman.
Absolutely. The big fella is always a dead cat bounce, but Charles Schwab's telling me more because it's always been a takeover. There's been tremendous insider buying. Charles Schwab himself has been putting his money where his mouth is. and the stock is showing absolutely nothing, not even speculation alone. And that to me shows
it lost 40% of its value in a week. Never
that's
a good
correct.
sign for a stock, is it?
No.
It's like having a heart attack. So I think we've had the heart attack in the market with SVB. And I hate to make the prognosis, but I think
You got to get
there will
kid,
be
don't put the paddles away.
there will be other, aftershocks from what happened a month ago.
But you know what?
It-
This is the question, Coach. Not to cut you off, but I'm going to get to your point. Will the aftershock and Silicon Valley was a big is it going to be a bigger aftershock? First of all, they took the market up after this first shock, evidence of now. So if the second one comes, which I actually do a degree to, I'm not playing it that way, but I could see it happening more than not. If I had to, I would play it. Is that will the second aftershock be worse? And if it's not, will that be even reason to propel the market even higher and then go in the new bull market, which people are even debating now?
I know that's it. The Dave H. Contrarian melt-up scenarios being bandied about like it hasn't been in 4 or 5 months, and that's another reason why I think that this is a good sell zone.
But
People are starting,
I'm sorry to interrupt.
at least for a trade.
At least for a trade. So with that being said, I'm not denying that I believe that usually that comes in bunches. Everything comes in bunches. And by the way, like evidence in Charles Schwab or other financials, it's either still a hangover here or the other shoe. Now the question is like I said, to be redundant, is the second shoe going to be worse than the first shoe? Because the first shoe, which by the way was a decent sized scar, they took everything up as sans maybe some of the financials. So that's the question right now. I don't really think it's so much as something's going to happen. Everybody, like we said on the bear case that I posted on TGH, I don't think the bears are really convinced that it's over yet until the price action maybe say so. And right now, maybe one day doesn't make a reversal, but certainly for a trade, we've been pointing out certain areas where it might be either taking some time off. I'm not going, saying full boat short, but certainly profit taking, as you can see now, is evident. Is not surprising.
Okay, I mean, I know it's very aggressive to think that we're going to take out the October lows. It's a pretty aggressive call, but when I look at the weekly S&P chart here, we need closes first of all under 39.
Let me share the screen, Coach, if you don't mind.
Okay, so anyway, I'm thinking we could trade down to here by June, July, 32.50.
True. That's been
okay.
Yeah.
All right, so here, you got it, buddy. I just turned it over.
Okay. Share screen. Let's go to charts. Let's go right here. Okay. Now, I understand that there's been pockets of strength. Google bounced over the 200-day. Apple's been nice. But you're having stocks at General Motors that showed strength, that finally could have turned around. Now is in a precipitous position.
Yeah, they're aborting.
You can look at a Disney. Same thing, no interest.
Yeah.
You can look at you were pointing out like a stock that CF that led this whole rally to go with your Deere and Caterpillar. So what I'm saying is, I don't want to be, it's a broken record. There's still pockets of strength to a degree, but certainly the XBI, which has a lot of overhead supply, with all these with all these stocks I'm pointing out, like the XBI Disney, they're one bad story away from almost being another shoe to drop in their respective areas, if you will.
What is XBI again, Mike?
That's bio.
Okay. Bio hasn't participated for months now.
Well, I mean, this is the chart on the SPYs, and everybody's debating that the NASDAQ and the SPYs have been making a move that I'm not sure the exact percentage, that those percentages are cocktail fodder, but Apple, Microsoft, and Google doesn't take up like 40-50% of the NASDAQ. Those are all the mega caps are really going. Here's the chart on Tesla. I mean, that's one, the Tesla, that's a short. That's one bad delivery situation.
Now we go to 150. I thought we were, a few weeks ago, but we rallied one more time. But I still could see 150 at Tesla.
MU gave it back. Absolutely, Coach. I do agree. Baba, had that was the good news. I get it. JD, by the way, which used to go hand in hand with Baba, has nothing to do. That's these stocks that popped formerly are not popping anymore. Kohl's, Macy's fired their CFO. That was a big news. That's going to come back to the gap. Kohl's had good news. Insider buying aggressively left and right.
Still looks ugly.
That's going to come back to a gap. So, I get everybody.
There are a lot of pockets of weakness. Where's the strength? Okay, besides, where's the strength? Just the miners today? That's pretty narrow. What else? Oils.
Oils. Apache. I was short this. They covered like a piker. I don't know why. I shorted it here.
Hey, I want to say something about OPEC and what happened with oil over the weekend. They're not making Powell's job any easier. And, I was negative oil. I was looking for a place to sell this rally.
Right.
Thankfully, I didn't do anything before the weekend. And this is not going to help Powell. It's not going to help consumers that are already maxed out on with credit. In fact, Mike, I use Instacart for delivery of groceries. You know what they're doing now?
I have no
idea. You can finance your grocery purchase in 4 separate payments now.
Right.
Come on, man. People have to finance their groceries now, bro.
That's exactly why this stock imploded. That's what they were doing in AFRM. Buy now, pay later. AFRM, that business model didn't work. AFRM was
buy now and not get paid later, and not get paid later.
Well, getting back to I want to finish a couple of things in
all right. Sorry to
Oh, so sorry.
I'm high energy today.
I'm sorry that you leave. I hope you don't leave it all out on the table here before your next.
Oh my God, yeah.
All right, this is.
I might.
The Rev said it good.
You have any Viagra?
No, I'm not there yet, Coach.
All right. Oh, you are such a lucky guy. All right, man.
I digress. Never.
I digress.
I'm not buying.
Man.
The Bears are trapped like they were in January. They're not.
Yeah, I saw that in the room.
There's a couple. Listen. Everybody's looking. There's one chart on the SPY. Here's another. The Nasdaq overbought more than it's been in 5 years at this point. There's the JP Morgan view. There's the CTA position in Nasdaq. They're even chasing it further. And the last thing I'm going to look at is this. I had something else. Thank God I sold the noggin, by the way.
We have NFP.
This is what everybody's looking at. Here's ES, and here's the SPY. I'm sorry, Coach.
No, go ahead. They're going ahead with the NFP on Friday. Are the markets open on Good Friday?
No.
They're not, but they're going to have an NFP.
But the racetrack is. That's more important.
Huh. Okay.
NFP, we're going to have it for you. As a matter of fact, everybody should look at the schedule. I always post the schedule.
So they're going to release it with the market close?
You know what? I guess they are.
Wow.
Here's the chart on the SPYs. So, the level's evident. The market's breaking down nicely now. I'm not going to as well.
Yeah, that was kind of a neutral formation, a symmetrical triangle that's compressing.
Here's a chart on the SPYs as we go now. There's a minute chart every last of me because it's a minute. So there's the 5-minute chart right here.
Yeah, look where it held.
The VIX. Yeah, here's the VIX. So, you know what I mean? Let's trade tactically right now. One doesn't make a reversal. Microsoft, Google, Apple still positive. All right. So let's trade, you know what I mean? Just let's stay in the room and just handle stocks that are trading with good range, volume, and positive price action relative to either the ES minis or the market. That's all. So the plan hasn't changed.
All right, buddy. Nice trading.
Okay.
All right. I'll catch you a little later in the week.
You got it. See you Thursday, Coach.
So the Mike and Dale show to keep you in the know.
Yeah, and Thursday it's going to be the Dale and Mike show again.
And definitely some actionable ideas and some things for you to be considering in your narrative is what you heard today.
Absolutely.
All right, Mike.
Thank you, everyone. Thanks for sharing. Cheers. Have a plan. And, if you're going to start concentrating this type of market, start small. They don't turn on a dime. They usually take a couple of days to wash out. Trust me, including the goals. Yeah. Thanks,
and
everyone.
Be careful with China on Thursday.
That's why Coach. You know what? That's why Coach gives the 9:30 meeting in TradeGATEHub right here. And that's why I'm on at 11 to guide you maybe how to trade it, or we're on twice a week as we are now to tell you how to trade it. So go on, get Coach's macro views on commodities, the markets, giving hints about China. I'm a little bit more micro-centered about how to trade it, either short-term or tactical. So we have here, just like TradeView Markets, tremendous, all financial instruments, and we have financial, opinions on